The second quarter of 2014 is now in the books and will go down as another positive quarter for the U.S. equity markets, as all the major U.S. equity indices posted a positive return for the second quarter. That said, the positive return for the equity markets does not come in a straight line this year. As a matter of fact, through the first half of 2014, the S&P has seen two drawdowns of 4% or more and two subsequent rallies of 8% or more. All the while, U.S. equities as an asset class has continued to be the highest ranked asset class out of the six major asset classes that I evaluate. And that's been the case for nearly 3 years now. The market will rally and will pull back in the same way that you and I inhale and exhale. Over the past few years, every time the market has rallied, it's rallied higher than the previous, and each pullback has been generally higher than the previous pullback. It's usually the sign of a positive trending bull market. With that in mind, there are a couple other market observations I'd like to share with you today. After a review of the historic summer returns, for the equity market to determine if there's a bias towards the annual summer blues or dog days of summer argument that's often applied to the market, we find that over the previous 33 years, 14 summers, or 42% of the time, there have been losing summers for the S&P 500. In other words, more often than not, the market sees a positive return during the summer months from June through August. Today, nearly 75% of the stocks trading on the New York Stock Exchange are in a positive trend, which is to say that the majority of the stocks continue to show positive trends. Further, among the NASDAQ stocks, which have been in the news over the past few months, 55% of those stocks are in positive trends today. When thinking about the global equity opportunities, U.S. equities remain stronger than international equities. However, within the international equity market, the developed countries, particularly Western Europe, carries a baton versus the emerging markets. We have no way of knowing how this offensive possession will play out. Ideally, we'll keep the offensive team on the field for a long, sustained drive. We're not going to anticipate when we think the market rally has exhausted itself. Rather, we'll let the markets tell us when the time is right. Until then, I will continue to diligently review your account, making the necessary adjustments to position your account in the right direction. As this offensive session progresses, I'll be monitoring the overall market, looking for any other potential areas of leadership. We adhere to both the buy and sell side of our decision-making process, and we let the discipline successfully navigate this market. If you have any questions regarding these strategies, or any other strategies for that matter, feel free to contact me. I'd be happy to discuss them with you in further detail. In the meantime, kick back, relax, enjoy the rest of the summer. As always, thank you for your business and your support. And if you know of anyone that you think this type of information would be of a benefit to, please share this communication with them and ask them to go to our website and sign up for our 2-Minute Tuesday. Make it a great week.